So if it's not really a supply disruption that we're worried about, and it's just the fear here, and oil stocks are trading higher, how do you interpret that move higher? Is that durable? Or is that short-lived?
Well, I think the market today versus yesterday is less sanguine on there being, no fallout. In other words, I think there is some view. I mean, Straits of Hormuz. What could happen here? There's a lot of things that could happen. Given the non-OPEC rising supply of what I think is also out there pushing around oil prices. I mean, largely the world's awash in oil right now, I would argue, and I think there's a risk of even more of that if you at some point believe once you get through, I can't predict what's going to happen in Iran, but oil markets might look ahead to a place where Iranian oil can flow more freely at some point. I think in the short run, oil, but energy equities trade fantastic. And I think after underperforming for a long time, and I think you can get to valuations and you can get to free cash flow yields and dividend break evens in terms of an oil price in the mid 40s for the big integrateds that I think makes them very attractive here.
Yeah, I think trading the commodity and trading the equities are entirely different stories, to Tim's point. So I think oil can go sideways to slightly lower from here. And I think these stocks have now told the marketplace that they're in this sort of new paradigm. And I'll say ExxonMobil, which was sideways for the better part of 3 years, between 112 and 120. I mean, that move is significant now at an all-time high. Valero continues to work. Marathon Petroleum, the oil service names, the Ian Cairns carved last year. Obviously. Yeah. I mean, look at Halliburton and look at Schlumberger. Now, I'll say this. Halliburton's right against a 9-year downtrend that I think it's going to break, by the way, but Schlumberger trades extraordinarily well.
SLB.
So the Strait of Hormuz carries 25% of the global oil supply. If that were to stop flowing, WTI probably goes to 100 to 125. That's most likely not. Pippa said it.
Yeah.
I don't think it could happen. I don't think it could happen with this administration. I don't think they would let it happen. But I would stay in ExxonMobil. I don't think it's overvalued. And I do think that oil is coming lower. How much lower? I think it could trade to 45 or 50. It didn't do anything on Venezuela. And now with Iran, I think that this will either escalate and we'll have a blow off top, or it will, I was going to say, disintegrate. That's not a great word. So it will expire or evaporate on the upward side for this risk analysis to oil. And I think that's probably where we're headed.
Well, the Trump administration doesn't want oil prices to go higher. You have that sort of built-in cap in a way.
Yes.
For the administration who's desperately seeking affordability for the American people.
Right. And one of the bright spots has been that oil has really been
much lower.
Yes, much lower. So clearly that there's a motivation there. But I think I agree with everyone here. But I think it's that there's a rotation now. Mm-hmm. This has been out in the cold for a while, and this is where there's value. And Tim always talks about, getting away from the Mag 7, and where else could you go? And here's one that's really been left for dead for a while. And valuations, they've started to move, but still they have so far to go. I still think there's a ton of value there.
That's where I think you have to go, though, because I do think it at some point gets back to valuations. And I mentioned nat gas last night as places as part of this trade. What else works also in a world where there's, some cap on utility prices in different parts of that trade? And I mentioned Cheniere, and it's trading at a 15% free cash flow yield. We know that there's maybe an overbuild on the nat gas side. All that's well in the price. I think there are places to play throughout. I also think the MLPs, midstream, more utility-like returns, have fantastic balance sheets, haven't overextended, and I think are very interesting here. I will say the administration, President Trump has a delicate balance, though, to strike between a very strong part of his base that is in the shale-producing parts of this country. I mean, we're not terribly competitive below $60 a barrel in terms of oil, in terms of shale and Permian and big, important parts of the production base in the United States.
Yeah.